Friday, March 21st, market analysis, Standerlick. Here we go. I usually do the stock market indexes first, in particular the E-mini, and then futures markets. And maybe I'm going to discuss something else at the end of this today, which may surprise you. So here we go. As you know, the market developed a double or triple top basically from early December through the high on February 19th. We started breaking out of the formation on March 4th. We got down almost to the minimum downside objective, which is 54 or 5,500, give or take, a few ticks. But hit a support area in oversold condition, and on the 13th of this month, turned around a bit to rally. The rally got back up close to the resistance area. Thought we might get to, but I was skeptical about the rally in general, so I wasn't quite convinced that we would be able to rally all the way up to the resistance area. Now, today, well, yesterday, we had a doji inside day, means uncertainty. Market not quite sure whether it can get strong enough to make new highs or new lows, weak enough. So it's an inside trading range day, no higher high, no lower low than the previous day's range. Today, we did start to slip. We did challenge the lows for the whole week, which in this case, the E-mini was on Monday and Tuesday. They held so far. Very close. The prices are really close together. Now, we've got a good bounce, but I think we might see the end of that now. And I'll change to the 5-minute charts in a moment for each of the indexes. And that 5-minute data, instead of the usual 1 minute, gives you a better perspective on what has really happened and some significant detail for the last several days, even more when you're talking about this traditional market hour, 6:30 to 1. Now, let's take a look. So I think we're going to turn here and start to slide down. Here is the last, about 3 weeks or so on a 5-minute chart on the E-mini. Got up into that resistance area on March 4th. So that's almost the top. Well, okay, go back to, February 19th and start to slide and slide, start to get oversold, establishing a support area, got broken, and then convincingly and stayed down, hit oversold, got into a support area right here a few days ago, and then Monday, Tuesday, Wednesday, Thursday, I'm sorry, today, Thursday, Wednesday, Tuesday, Monday, we hit almost exactly the lows of Monday and Tuesday. We start getting below today's lows, which is Monday and Tuesday's lows, we should start a free fall, and it should start to go down very quickly. And I'm thinking there's a chance it could even get all the way down to the lowest low made on the 13th and start to eat into that support area and start to get down to my minimum downside objective, which would be, of course, 5,500. But that's quite a stretch from here at 5702. We would have to be down 20 big S&P points or 200 on the E-mini. I doubt that's going to happen today. It wouldn't completely surprise me, but it's quite a ways. SPY, daily data, same story. Got up toward resistance, not quite, not even overbought. Only got back to about 50 on the RSI. And now we're starting to see minor new lows for the week. All 4 days are now at today's lows above that price level, but we've bounced back a bit. Only if this market closes very strong, like up 5 points or more, would I amend my comments to adjust for a little bit more rally up to that resistance area that I thought at first a few days ago might be reached. Not Not anymore. I'm looking for this rally to quit and turn down. On the SPY, we got up to the low of yesterday, closing an opening downside gap this morning at 6:30 California time. And we've gone up a little bit more than the closure of the gap. So anytime now, maybe a hair higher, we should stall out and start to slip and maybe make new lows for the day. Fridays sometimes are a little bit on the unusual side, a weekend evening up, especially if it's before a 3-day weekend or some sort of expected uncertain political maybe event, whatever. Now, we've got the QQQ challenge the lows for the week on Tuesday in this case. Didn't quite make a new low, but came super close. Still basically at the bottom of this little trading range, support and resistance, which we're getting stuck in. So I kind of don't think we're going to see much more of a rally, and we're going to turn down. But again, if it were able to get up significantly, in this case, especially if it gets up above yesterday's high, then we're probably going to pop up above Wednesday and last Monday's highs also, and continue the rally back up to that resistance area at these higher levels at around 500. I don't think that's going to happen at this point. But I can't get bullish intermediate to long term. Too many problems. I'm still expecting soon, not particularly likely today, but next week, new lows for the whole trend. And here's your 5-minute chart. All I can see here is a big flat sideways. Usually with the trend being down prior, we're going to see new lows. Next, NASDAQ futures, same kind of comments. Challenge the low for the week, which happened to be on Tuesday in this case, like the QQQ, of course. And we're popping back up. Remember, our current quote is below yesterday's close, below the close of Wednesday, below the close of Monday, which is the highest close for the move back up. Tuesday, there was a big dip and it came back up. So I really need to close below today's lows in order to see the next downside leg get the ball rolling pretty good, challenge the whole lowest lows in the last few weeks for the trend, and finally get to my minimum downside objective at 19,211-ish for the NASDAQ futures. Next, the 1-minute chart. Don't see it. We got just a few minutes ago, very overbought on the 1 minute, and that helps me think maybe we're seeing the rally for the next few hours or more. Next, YM. Pretty much the same commentary, except the YM already got up to its original breakout level, which was only about 2 weeks ago. So it has fulfilled what I think might be possible on the other indexes I just covered. So this has done it. And it made a new low for the previous 3 days. So turning around here would be just idealistic for the YM, Dow Jones futures. Looking for lower levels. And the minimum downside objective here is 38,680, quite a bit lower. I'm not sure how that's going to match up with the other objectives, which are much, much, much closer. So they're probably going to go a lot further than my minimums, and this one's going to get down to my minimum, and then everything will turn up after that. I think that's the likely scenario. And the 1-minute chart on the YM, all I can say is just don't trust this. Next, Russell. I don't trust this. We're getting stuck between a rock and a hard spot. I fully expect 2000 is going to be tested again. That beginning of support is going to be broken. You're going to get down to 1950, the bottom of the support, and probably drop off even more after that. Yep. 5-minute chart on the Russell. Can't see anything here but problems. Down. Okay, let's go to bonds. I did get my green circle, at least at a minimum, touched. The circle was drawn at least a week, if not more than that, prior to the market coming down and touching the circle on 3/13 of this month, the 13th of March. I would have liked to have seen it last one more day for Friday of last week. That would have been perfect timing. And I would have liked to have seen it drop off a little bit more to around 115, 11-ish. But it didn't get quite that low, and it was one day early, but at least I got a circle that got touched, and I drew it there a full week plus before it happened. Now we've seen new highs for the rally yesterday. This is a head and shoulder bottom in bonds, I think. It looks like it. It's acting like it. And today's dip is no big deal. Doesn't do any damage. Doesn't, get close to the breakout level, which, by the way, is around 119, probably sometime next week. Let's call it 1910, give or take a few ticks. The minimum upside objective on this head and shoulder bottom, which started to form back in early November, is a minimum upside of all the way up to 128.9. But if we get up to 129 like I expect, of course, if the pattern works correctly, then we're kicking in a much bigger objective off of a broad double bottom over a 1.5-year time frame. And that bullish long term, it may not even get reached this year. Upside objective is 145, close to 146. And we're at 17. So that's a heck of a big move up to 45. 10-year notes. Same scenario, except the broad double bottom of the 10-year notes is a much better looking formation. The low we had in January 13th to be exact, was just a little bit below the low that was way back here on October 23 of 2023, a year and a half ago. So broad double bottom in progress, and the last low just this January is the head of a head and shoulder bottom. The last shoulder low appears to have formed this last couple of weeks in a flat as opposed to a sharp low like they usually do on November 15th. In this case, it was just a little flat zone and we turned up out of it. So the neckline here is slightly upward slanted and would be breaking out above it several ticks above 112, so a bit above 112. The minimum upside objective on this pattern I have not measured, and I will do it right now, because things are acting very adequately for the head and shoulder. So here we go. The 10-year notes, just a little higher. Okay. Is going to be a minimum upside objective, and I'll go over here to extend this line a little bit further. That's good. And it is way up to 116.25, almost 117, which will, like in bonds, pull the trigger on a much bigger 1.5-year double bottom formation that will have a final huge upside objective of 124.5, maybe not even being reached this year. It might even be reached late this year or next year. Long-term forecasts I'm not particularly used to giving very often. Next, but if I see the pattern, I have to say something about it. Crude came down to support, almost got oversold. Now a new high for the rally today. Currently trading around unchanged, but we did make a new high since the oversold condition and a little bit of a double bottom over a 5-day period, very small. I like what I see. I'm looking for more strength. Minimum 70.5, very likely, in my opinion. 73 probable, and I'm not ruling out even higher than that. Next, heating oil. Same kind of comments. Oversold, no particular support area per se that I marked on the chart. Upside minimum 2.30, potentially fairly likely 2.4, and maybe even higher than that. Next, natural gas. Small head and shoulder top. This is a relatively small pattern. If we saw the last shoulder high on Wednesday, which I had marked on Wednesday, then, oh my God, in one single day yesterday, we started to come down to the neckline, went below the neckline for a breakout, and closed below the neckline for a closing breakout. Now that means from now on, we're supposed to stay under the neckline. And guess what? Today's rally high is right smack on the neckline, a perfect spot to be considering shorting using the head and shoulder pattern as your trading tool. So what can I say? It's not down much from that high, today's high, but we did a little earlier make new lows for looks like about 3 weeks. We should be on our way down to a minimum downside objective of you take the highest high and then go down, straight down to where the neckline is, click. I've got my measuring tool, measuring stick here now, grab it. And from the breakout level, you have a minimum downside of 2.971, or yeah, that's good enough. 2.980 maybe. That's it. Minimum downside objective. I don't want to close above the neckline. Sometimes it gets a little bit above it during the day. That would ruin the pattern, and all my forecasts would get squashed and canceled. Your protective buy stop at the moment should be somewhat above the neckline, not too far. You know the dollar risks when you put your orders in. And once we close near today's low or lower, then you're supposed to start to drop your stop below where you sold short to lock in a little bit of a profit. And then again and again and again, depending upon how quickly the market goes down. Goes down slowly, lower your stop slowly, fast, lower it fast. Okay, next. Gold overbought, finally turning down today, big time. We blew out yesterday's low, the day before low, that day before that's low, and we blew out Tuesday's low also. All of a sudden, we're now coming back to my first downside expectation of 29.70, but I think it's not going to stop there. I think we have a good chance of coming down to 28.52. That looks fairly likely in my opinion. Silver, forming a potential very large head and shoulder top. Sorry about these head and shoulders. It is my favorite pattern. I see them all the time. Most of them work the way I expect, or at least very close to the way I expect. And when they don't, I say so, and I kill the pattern, removing the markings and so on. Good try, bad analysis. But here we go. Dropping off the last shoulder high, it occurred approximately a week and a half, maybe 2 weeks earlier than I thought. It's a fairly large pattern. This goes back to May, 10 months ago, of 24 for the first shoulder. Neckline slants upward across the two major lows, of course. And the minimum downside objective on this, I've already got measured way down to 2375-ish. Big top formation in silver. Going to take a while for that to actually come to pass if it works correctly. Platinum, not the same thing. We got great sell signals May 2024 and on the top of the market to the exact day, October 30th of 24. Not so perfect, but it did make some money. And that was the signal on February 3rd this year. And overbought conditions a few days ago in a resistance area. I keep saying one of my favorite combinations, turned it down on Wednesday, on Thursday, and today again. Fairly big break too. Already to my first downside support level. I do expect it to come down to 957-ish and very possibly 937-ish. Next, overbought conditions. Looks like copper could be turning also. Momentarily, we're just a little bit lower. If we get above yesterday's high, frankly, I think that would be even more bearish, to be honest with you, because you would have an outside up day or what I call a bass backwards reversal if it closes higher. If it closes lower, I'm going to get a red ER sell signal point blank. But we got to get above yesterday's high in order to have the engulfing higher high, lower low. Then the lower close to have a bearish engulfing. But even a bullish engulfing in overbought conditions makes me very leery about further strength. And I'll show you why on my last chart coming up in a few minutes. We've got soybeans. I'm trying to make a case for a long-term bottom. We are just going sideways here. We just can't afford to make new lows on a closing basis in particular for the last month or two. Same thing for soybean oil, but at least I got a buy signal yesterday. We came down to around the middle of the range, and that's okay. It's definitely allowable. And frankly, ER3 bought it around where it is right now. I don't want to get below yesterday's low. That'll kill my green signal of yesterday. And I don't want it to close below, say, 41. That would start to do some damage to my long-term bullish opinion. Next, meal. Higher on the day, making a minor amount of progress. Need to close above 309, call it 310, in order to get the ball rolling. This is simply a major historical support area that is trying to hold, and I'm not getting much help. It's nibbled away at the support level in the last 3 days. And we're just up a little today. I want it to go up a chunk or more. Next, corn, a little down day, no damage done. It already came down, formed the last shoulder low on March 4th. The first shoulder low was a buy signal, ER green buy signal on February 26th, a year ago, plus a little bit. This is a very large bottom in corn. It's the identical formation that we had at the bottom, which was the shoulder in July. The head of the formation for the little pattern is August 27th. It's the same low for the big pattern also. And this price was I think exactly the same, 407.50, 407.50 to the tick, exactly the same for the 2 days that it bottomed out. If we, on the second day, had a one tick lower, we probably would have gotten oversold, and then we would have had an outside up day, bullish engulfing green. It missed having green bullish engulfing ER buy signal by one tick. Ouch. But we did get a buy signal on the first shoulder of the small pattern, and we did get a buy signal on the last shoulder low to the exact low days. The upside breakout was right here. The minimum upside objective is right here, and it worked. So if this is a shoulder and you start going up in the next weeks to come, next few weeks, and we break above this dotted line, then we have a 1 year pattern, same pattern, head and shoulder bottom, that's going to produce an upside objective of 635. Next. Wheat, no head and shoulder, 3 bottoms, a little lower than each other, but a major support area. We are now up above, coming down 2, and all I can say is I hope this thing turns. I'm not oversold. All I got is support. We have a doji today, inside day, dead unchanged at the moment exactly. All I can say is I need to see new highs again real soon next week. Then I'm going to be happy. Next. Overbought conditions in cattle, and yesterday it made a new high for the trend on a closing basis also. Now, being up in the 87 RSI range yesterday is very high. When it starts to get into the 90s, I start to scream bloody murder. It's about to top out in hours or maybe a day or two, but very soon. Today's RSI high was, and this is my custom RSI, 89.94. Come on, that is so close to 90, it's not even mentionable. So here we go. Closer to 90, new high in price, still overbought a lot, flip-flopped to lower on the day, lower than the middle of yesterday, and still near the low of the day. On a Friday, more profit taking coming in. I think there's a good chance of that. which could drive it below yesterday's low. And if we do see today, after my YouTube, that it did that, we will have a red, bearish, engulfing ER sell signal today. But it has to get below yesterday's low and stay lower on the day on the close. Next, heating, I think it's topping out. Hogs, don't have really a lot to say here, frankly. In support, did get oversold at the bottom of the support, start a nice rally, bump into some problems, pull back a little bit. I favor the upside slightly, but again, I'm not going to stick my neck out on this. And we're back to the E-mini, which is, I think, dribbling back down a little bit. Yeah, not much, but just a little bit. Okay, now I wanted to show you something else, something brand new I haven't talked about before, and I'm actually going to change to a TradeStation chart real quick. I used both platforms. Just a second. Okay, here we go. Pulling it over to my main monitor from one of my others. I have 3 big 55-inch monitors, big screen TVs. We got overbought on this, and it doesn't matter what it is. It's a stock and it's Shell, SHEL, daily data. But what it's doing, that's the important thing. Not what it is. I don't care. I have no idea what Shell does. It might be Shell oil. I don't know. Got overbought. Started gapping up. Gaps are almost always filled. So we're going to come back down more likely than not to 68.81 on this particular stock. Might take a week. Gapped up, stayed up, got more overbought. Got more overbought. Then on Tuesday, it gapped up again. Wednesday, it gapped up again. Now, yesterday is the key. In extreme overbought condition, 91.5, we had a higher high, we had a lower low, that's the engulfing, but the close yesterday was above the high of the day before, Wednesday, on Thursday's close, and it was an outside up day or bullish engulfing, and it was in overbought condition, and it had an upside gap the previous day, which looks suspiciously like an exhaustion gap in very overbought condition. So to my partner that I was watching this form yesterday, I said, look, this is one of my bass-backwards reversals in progress. I think this market, if it stays where it was, and it was around this level late in the trading session, if it closes here, I think it's going to come down tomorrow. And Jim, that's his first name, I think it might even gap lower tomorrow morning, which it did this morning and dropped to new lows, closing the first gap, which is the exhaustion gap. We're still down near the low. I wouldn't be a damn bit surprised if it didn't make even lower lows yet. And maybe I'll track this the next few days, but it's starting exactly the way I thought it would, and I got a witness. So this is a reverse engulfing situation, but it only is mentionable when you have an outside up day in extreme overbought conditions, and the exhaustion gap to the upside was just icing on the cake. I don't need that. Outside up day, very overbought. I'm starting to scream top. And that's exactly what I did before the bell. And it's working out just like I thought and described yesterday. Next is going to be my finish. And you guys have a great day. Profitable trading to you. Sorry this is so long.